Welcome to McPlum, simple solutions served daily.
You start by narrowing your market and connecting live sources. Do this now so you can react. Subscribe to 1-2 low-latency feeds and tag the 1030 instruments you will trade. Next, set concrete risk rules, dollar risk per trade, daily loss limit, and position sizing. Once done, configure alerts tied to headlines, price levels, and volume spikes. This gets you from setup into action immediately. You will be ready to spot tradable moves as they occur. You now interpret incoming news, don't trade every headline. Scan for clear catalysts, earnings beats, guidance changes, macro prints, or M&A. Apply filters, keywords, sentiment score thresholds, and abnormal volume to cut noise. Then add market context. Compare pre-market action, overnight futures, and order book depth to gauge conviction. Once filtered, map the piece to your strategy: news-driven breakout, mean reversion, or volatility play. This disciplined triage prevents impulsive entries and keeps your edge intact. You execute with clear rules. Place limit or algo orders and attach stop and profit targets before entry. Scale into positions on confirmed follow-through and scale out if momentum fades. This preserves capital and captures moves. Manage trades actively, moving stops to break-even when appropriate, and logging decisions for review. If you see erratic price action or contradictory data, pause new entries, check your news feed latency and filters, and only resume after fixing the source. This single troubleshooting step avoids repeated losses.
Thanks for watching. Stay juicy and subscribe.